Everyone, I'm Rick Bensignor. Today is Tuesday, August 3rd, and welcome to this week's In the Know Trader Show. On tap this week in our trader education portion, we're going to talk about, is there a value to using a trading coach to improve your results? In our market overview, we'll take a look at the Dow and the US 10-year yields. And we're going to focus on bonds this week. And we'll call our sector analysis bond proxies, and we'll go through about a dozen different popularly traded bond ETFs to see what those charts are showing us. Before we get started, just a reminder, we put out two publications from In the Know Trader. One comes out Thursday nights. It's our weekly ETF Tactical Trader Report. It reviews what's going on in the markets, usually the S&P. We get into pretty deeply the bond market, gold, the dollar, sometimes credit spreads, etc. You can find out more on that at intheknowtrader.com. And then we also have our monthly 7-Eleven report. And we just finished our first year. The goal of this report is to outperform the S&P by being in no less than 5 or more than 7 of the 11 spider sector, the macro sector ETFs like XLK, XLY, XLB for materials, etc. So we will choose between 5 to 7 of them and try to outperform the S&P by avoiding those sectors that underperform. So I am proud to report that after our first year that just concluded July 31st, we outperformed the S&P by 2.61%. Over the year. And just so you know, historically, only 1 in 7 portfolio managers outperform over time. And our initial launch year, we outperformed by 261 basis points. So a great start to the year and to our first year of the 7-Eleven report. And the August piece came out yesterday morning with new allocations to start year number 2. And you can find out information also at intheknowtrader.com. My email address, rick@intheknowtrader. Thank you for the emails. Get lots of them. People who listen to this podcast on StockCharts, as well as people who have come across my reports and research from all different types of venues. And thank you for the constant email contact that you people have with me. It definitely shows me how many of you are listening to this podcast and are interested in what we have to do. All right, let's go back here and just kind of set the stage for the trader education portion. So you'll see ads constantly for companies that sell trading products, trading systems, coaching, etc. And the question that I posed to you today is there value to using a trading coach if you're looking to improve your results? And I think the answer, there's no simple answer in the sense that it's not a definite yes and it's not a definite no. It depends on who the coach is and what you're trying to accomplish. So let's start with the second piece first, what you're trying to accomplish. If the answer is, well, I just want to make more money than I am by trading, I would tell you that you probably want to get a little more focused before you hire a trading coach to know really what you want to work on, what part of your trading needs improvement or parts. And it could be everything, or it could just be one particular thing that you noticed over time. And a good coach would actually be able to help you figure that out if you don't know, if you can't figure it out yourself. But you kind of see that you make mistakes and you can't quite figure out why the mistakes are happening. And is it the timing of your entry? Is it that you get too scared when you're in a position and the minute it goes against you, you're getting out? There's all different things that affect the results you get as a trader. And certainly trading coaches can help. But I think what some of the questions you want to prepare in order to determine if you want a trading coach and then who you use as a trading coach has a lot to do also with those prospective coaches. So, let's start with, well, who they are, and what's their background. Um, have they been trading themselves? Did they come from Wall Street firms where they were trader? Maybe they're not trading right now, but they traded for 20 years at a Wall Street firm. Um, what's basically, you want to get a sense of their background and understand who they are and what they've done in life in order to even be qualified to be a trading coach, because there's going to be a lot of people out there who tell you that they're coaches and they can help improve your results, and you try to find out more about it, and it ends up being a whole bunch of talk and beating around the bush, because they really don't have the skills themselves. And they might say, well, I understand technical analysis. Well, a lot of people quote understand technical analysis. You won't find so many people who consistently make money simply using technical analysis. Um, do they say that they win on 80% of their trades? Well, I'd be very skeptical if somebody tells you that, because it's very unlikely that somebody wins 4 out of 5 times over time. So, could they have 4 to 5 winning trades in a week? Sure. But do you have 4 to 5 winning trades over 6 months, over 12 months, and over 3 years? And the answer, I can virtually tell you, is no. And if somebody says they do, they're probably lying or playing around with numbers or what they consider a winning trade, because you don't find people who make 80% of the time. It doesn't happen. In fact, some of the most famous and successful money managers and traders out there lose well more than 50% of the time. And yet they are very successful because they understand money management. And when they're right, they can let their trade run for quite some time. And when they're wrong, they know that they're wrong, and they get out and move on, and don't get caught on the fact and stuck on the last trade they made. They just simply get out of a trade and find the next potential opportunity. So there's lots involved in who that person is. So I guess if we're going to talk about this and some of the most important things to consider in thinking about a coach, I'd say number one is maybe you want to hire someone who blends well with your own style of trading, not somebody who's going to try to completely undo what you've done. And that assumes that you have some trading experience. If you're brand new to trading and you want to kind of learn from somebody who is a successful coach, and how do you deem somebody as a successful coach? Well, their students give accolades about what they've learned and how good that person is. That's how you find a successful coach. But you want somebody who kind of isn't going to completely run you over and tell you this is the way to trade, because there isn't one way to trade. We all want the same results, which is making money, but there isn't one way to trade. And if they're hell-bent on telling you that this is the only way to trade and it's their way or no way, I would certainly avoid them. That's not somebody who's matching with your style, and it's somebody who's basically going to try to teach you everything their method, and that probably isn't going to work for the bulk of you. You also want somebody who is going to blend well with your personality. So you have to kind of know yourself and know what type teacher is going to work for you. You think back to your grammar school days and junior high and even high school, and to many people back when they were young students, there were certain classes that you did well and certain ones you didn't. Now, some is because you had a natural aptitude for the particular subject matter, but a lot of it also had to do with your connection with the teacher. And if you liked the teacher, you often did better in a class than when you didn't like the teacher. Now, in public school, you don't have a choice of teacher. You get assigned to a class, and that's who your teacher is. Here, when you're hiring somebody, you have the choice. So you certainly can interview a teacher. make sure that it feels right, that there isn't, kind of natural conflicts that occur, that your personalities blend well. I think that's really important. And you've got to make sure that the teacher also has the ability to communicate easily and understandably. So um, you're going to want to talk to the teacher themselves and kind of do a little interview, and get a couple of references, and talk to people that the teachers worked with, and get reviews from others, such that you get a sense of, is this somebody I can work with or not. Now, prices probably range all over the place from, I don't even know what the cheapest would be, but it's definitely going to cost you a couple to a few $100s per hour to get coached. And if somebody's charging you $50, I'd say they're probably not the right person, because if they're only valuing their time at $50 an hour, then they're not likely going to have the knowledge that you need and be able to pass it on to you. Now, hopefully, depending again on who it is, sometimes these can go into what an attorney costs per hour, because you're paying for their time. But do your homework, and make sure you feel comfortable with that person, and that they communicate well and are able to work with you to get to accomplish what you want to accomplish, not what they want to accomplish, but what you want to accomplish. So think about that. You want somebody with the right personality, somebody who you easily understand, communicates well, and somebody who creates positive results. And in this game of trading, positive results means consistently winning, and or again, it's okay to lose more times than you make, as long as your winners way outrun in dollar amounts your losses. So you want somebody who also completely understands risk management, and how to identify when a trade is not working, and to just get out and not beat yourself up over it. It's just a trade. And if you're a trader, there'll be tons more of them in life, and in that week or month. And it's learning how to move on from a loss to just go on to the next trade. So, in this business too, and I'm amazed at the commercials I see, the advertisements, both on TV and Facebook and other social media, for trading academies, and we're going to teach you the secrets of this. When somebody tells you that they have a secret, then I'd stay away from them. There are no secrets on the street. There just aren't. And when somebody tries to advertise you and tell you about a secret methodology they're sharing with you, I again would tend to avoid them. They're trying to hit to your emotions, and that's not. They may be good advertisers, but that's not what you want as a trading coach. Just think about, talk is cheap. It's about results. And so do your homework before you hire a trading coach. Yes, I am a trading coach, and I would say, to some of you, I'd be a great coach, and to some I may not be, simply because of all the things we talked about: personality, communication, etc. I've been doing this 40 years, and I've been trading for 40 years. I still actively trade, and I trade both for myself as well as for a hedge fund. But that doesn't necessarily mean that I'm the best coach for you, because it all depends again on personality and other things that need to gel. So it needs to feel right when you hire a coach. So that's what we're going to talk about this week, as far as just a trading coach. Next, let's move on to some charts. The market's near all-time high still, so we'll look at the Dow, and then we'll look at the US 10-year via the TNX before we start getting to all the other bond proxies. So I am going to switch here to charts. And I use the CQG platform because they're one of very few places that have the models that I need on them in order to interpret the markets the way I do. So it's not that I don't like other platforms. It's that this happens to be a platform that has the models I need, and the models I use, in addition to standard models. In this case, what we're looking at are, let's say, some of Tom DeMarc's models. Again, only available on a very limited amount of platforms, and he keeps it that way. So it's not like these are going to show up on the most of the internet type of platforms. All right, let's start here with the Dow. This is a weekly chart. Notice all the trend lines are still positively sloped. We're right near all-time highs. In fact, it looks like earlier this week, well, today is what, Tuesday. So, we touched up to what appears to be a new all-time intraday high yesterday or today. The Dow's up 117, and but the things that I'm watching are these 13 signals, and these 13 signals, without going in through the whole model of how we get to them, is a count that Tom developed. It's a relationship between pricing of bars, and when you see these 13s show up on top of price bars, it often gives you an indication that there's some type of trend exhaustion. Now, in an up move, trend exhaustion doesn't necessarily mean you have to go down. It means that you could go sideways. And because if you've been trending higher and then you go sideways, that's a change in trend. You're no longer going higher. So you can see that back in January, early January, there's this kind of exhaustive signal. We kind of went sideways into March. Then the market gets a whole new move up. We get another one of these in April. And there's been we've been above and beneath that until a little recently. Still holding the most near-term uptrend line, but we got another one of these signals here now. And that doesn't mean you just go sell out of everything you own. It means that there's increased risk of first putting on new longs in the direction of the trend at that time, if you get confirmation that the signals come in place, that the signal which is in place actually gets confirmed. So far, this one has not. That just showed up a week or two ago. So it's there, but it's not confirmed yet. So I'm not selling stock because of it, but it's probably going to stop me from chasing after names to be a buyer, simply because of this signal and some other targets that we've had. Now, I also look at where support is, and I've highlighted an area that actually over the next month, give or take, or two, seems to have multiple unrelated indicators come together. So we have a couple of different trend lines that come in here over the next month. You've got the downside bearish propulsion level at 32,353. So if that properly breaks underneath that level on a Friday close, it's a bear signal. But if it doesn't break beneath there, trades there, but doesn't properly break beneath it, it's actually bullish. So now I kind of have three things in that 32,000 area. And then from the cloud chart, the baseline right now is at 32,870. So I've got a cluster under 33,000 of at least where I'd say some support is if we started seeing a correction in the market. So it's always important to also know what your targets are, so that when and if, let's say, we pulled into this zone, you maybe down there you have resting bids in, because that should be a decent support zone. So that's the way I'm looking at things right now. Let's look at the TNX. So this is the US 10-year. Let's look at, let's say, the weekly. And what we've got here, so 9 counts also are often turns, but you can't do a 13 count without first doing a 9 count. So any 13 always comes after seeing a 9. In this case, this is downside exhaustion. These numbers came underneath the price bars. And in this case, this is yield. So this represented an indication that yields have exhausted themselves to the downside. We then ran up to a 9 count to the upside. We extended a little bit past there. And then 2 weeks ago, we hit a 9 down. We got a sharp rally from about I think it was 112 or so was the lowest, 111, no, 112.8. So now remember too, the TNX only gives you values for where the the 10-year bond trades, but only in between 9:30 and 4 o'clock New York time. But those, U.S. government issues trade 23 out of 24 hours a day, such that we actually traded a little bit lower than they are during the course of the day. So we got a bounce sharply up to 130. So we got almost a 20 basis point bounce. We're pulling back here, testing the lows now. We're at 117 right now. And I've got this zone in yellow highlighted as where I truly believe bond yields will bottom. And in this case, it's the Fibonacci box between a 38 and 62% retracement of the up move. Notice unrelatedly, just near that 62% retracement level at 92 basis points, at 91 basis points, is DeMarc's TDST line, that red dotted line. That is where this leg of the bull move initiated. And even though we bottomed here, the pattern actually started in here. So this is support down at 91 bips. So I've already hedged most of my personal bond portfolio and saved a little in case we got down here into the 90s. And at that point, I will hedge the rest and be out of the bond market for good. And I'll take the chance that we're not going to really get beneath 90 bips if we even get there at all, but that there should be strong support there, both from the interim high from May of 2020, plus then this TDST line here at 91 bips. And frankly, I'm not really interested in owning bonds that give me less than 1% yield anyway. So my view is I'm using this decline in bonds, which in bond yields, which means rally in bond prices, to get out of my bonds for good. And I will walk away from the bond market probably for quite some time at that point. All right, let's take a look at just some of these other proxies that I bring up. One, if not, well, let's just take let's just take the spider one away, and let's do IEF and put on a few of these studies and see what it suggests. Okay, so again, now everything we look at now for the balance of the show are bond prices, whereas TNX was the yields, right? So this is the price of whatever bond we're looking at. This is the IEF. This is the ETF that most closely tracks the US 10-year. So this should look virtually inverse to what we just looked at on the TNX. And of course, we had the 13 on the high, into the 9 down, into the 9 up. We could extend to 119.5 to 120-ish. That's, to me, kind of the best case scenario that you're going to see here. And at which point, again, that's the area which I'd be exiting this. And that's it, done with bonds as far as I'm concerned. If I'm dead wrong and this extended higher and yields made new lows beneath the, I think it was 38 basis points when we got to this high in bond prices last March, then IEF goes up to 126. And at that point, we probably have darn close to negative yields, which I don't think is coming in the US. TLT, the 20-year bond, similar pattern, just and similar counts, still 9 at 13 on the top, 9 on the bottom, and the 9 on the recent move here. So if this extends higher from the 151-ish it is now, look for 158 as your next target, and then potentially as high as 167. But again, I'm not thinking that that's what actually happens. BND, this is the Vanguard total bond market. So this is a proxy for, collectively for bonds. 13's on the high, 9 on the bottom, 9 on, a week ago. So this has targets at 87.50 and 88.19. Those would be comparable to what we just looked at in the IEF. That's a little bit above current price. Let's go on the shorter term side, SHY. This is a 1 to 3 year bond. This got 13s and 9s here looking for price exhaustion. You got to bounce up. One final move down, held above the stop out level for those 13s. We've come back. Upside targets here at 86.37. And then 86.48. Obviously, this has very minimal price movement because it is a very short-term bond. HYG, high yield. This is a very popularly traded ETF. Notice the stall outs that we've seen from the 13s. In fact, we haven't really progressed that much past where the initial 9 count came in, but there's clearly a whole band up here of resistance. The market fell apart from here back in 2020. It's stalling up against here now, continues to. If you get above 88.11, then look for 89.31 on the downside. If yields start going back up, look for 83.27 to 82. What do we got here? 82.85. Kind of these two lines, again, unrelated to each other, showing up in the same place as significant support. EGG, corporate bonds. Similar looking pattern that we've seen in other charts. The 13's on the highs, down to a 9 bottom, into a 9 high so far. It's not a defined high. If we continue to rally, 117 and change to 118 and small change would be my upside target. Initial support just about 114. LQD, another kind of version of the same thing. Corporate bonds, just different company doing it. These are iShares. We're stalling right here against 136.50 2 weeks ago, and even this week's high. If we extend, it'll look to 138.13. Only on a much bigger bond rally would you get up to 145, which again, I don't think is coming. Support down around 131 to 130.5. Municipal bonds, MBB, recent bottom, 13s, 9, 13s, all showing up here just in the 107 handle. Moving higher now. Looks like if this extends higher, you've got two unrelated targets just around 110.25. That would be upside targets. As far as downside support goes, anywhere from 107.87 down to 107.57. Under there, look for much more significant sell-off all the way down to 105.25. Got time for one or two more. VCIT. This is Vanguard's intermediate term bond fund. Again, you can see how many good signals these models are giving us for exhaustion of trend. So right now, we're also kind of on the best levels. Resistance at 97.14 to 97.77. That's about as good as I'd expect that to go. And one more, let's do BNDX. This is Vanguard's international bond fund. Actually, all right, so you get the idea. Very similar type thing. I want to look at EMLC, actually, now that I think about it. So this is one that I've watched for years. So this is emerging market bonds in local currencies. And emerging markets themselves have had trouble over the last few months, as have their bonds. We're on an 8 count to the downside. You'll see we are holding support at the TDSC line right around just shy of 31. So anywhere from 31 down to 30 is support here. And otherwise, this goes back up, and 32.22 is first resistance, and then 34.04. That is it for this week. I hope you enjoyed the show. And I'm Rick Bensignor. This has been In the Know Trader.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.